Today is the 18th of October and a continuing update for sterling US dollar. And from the video coverage which was recorded on the 5th, this was the possible expectation that we'd had a 1, 2, 3, this had been an A, B, C, 4, and then a fifth wave to a new high. I think that is now extremely unlikely to actually take place, and the reason for that is as follows. If this count was correct with a 1, 2, 1, 2, 3, 4, 5, 3, A, B, C, very deep fourth, and then the expectation for a fifth wave, after the completion of this, what is a 9 wave count for wave C, which is 1, 2, 3, 4, and then the extended fifth 1, 2, 3, 4 and 5, had that been a C wave, at the instant that that had completed, there would be an impulse wave to the upside. If this is impulsive to the downside, there would follow an ABC correction, and for this to be impulsive to the downside, it could be labelled as wave 1 of 5 if this count is correct within the monthly chart, because what's taken place after this 5 wave decline is an ABC, and this is a 360 minute chart. This is a line on close of this 5 wave decline, and you can see a very clear A, B, C, B, C to the upside, which has retraced. If I put that back to a candlestick chart, you will see it's retraced a very accurate 50% so far of this 5 wave decline. So we have waves 1, 2, 3, 4, 1, 2, 3, 4 and 5, A, expanded flat, B, C. Now that could be labelled at this moment in time as a 1, 2 or a 1, A. The expectation for this is that I think this correction is potentially too small for correcting this piece of data to the downside, and we have an ABCA. We may receive an ABCB to approach the low or break the low, and then a 5 wave C wave advance that could then be labelled as a 1A, B, C, 2 on a daily chart. But we are still in the B wave to the low, and then the possible C wave back to the high. So this currency pair could go back and forth for a number of days to weeks in completing this second wave. And if I look at this, is around 18 days, I believe. Let's have a quick check. 1, 2, 3, 4, 5, 6, 7, 8, 9, 13, 14 days. But if we go back to nigh on the start, well, not nigh on, the actual start of the third wave, which starts here. So if you go back to a high in a daily chart, which is the 18th of June 2015, so over 2 years ago, this 1, 2, 3, 4, 5 is actually this piece of data here on the monthly chart, and you can see if I just highlight that we're in July 2015. This is the correction that took place, retracing 76.4 of this 5 wave decline, which is labelled 1, 2, and as you can see, we have a correction similar to this at this moment in time. So I think this in its in isolation would be too small. Looking at this example, my expectation is that we will receive, bringing this back up to date, an ABCA, ABCB, and then C for a second wave. So this 50% retracement that we have at the moment could be exceeded with a much deeper second wave to the upside, which would then potentially place sterling US dollar in a much more bearish position as we would enter a third wave to the downside. That remains to be seen, but from this 5 wave decline, and due to the corrective price action which has taken place with an A, B, C, this count is now, to my mind, more or less void because of this 3 wave advance. For this to still be valid, you'd have to count this as a 1, A, B, C, 2, it's a possibility, but I think this is far more better labelled as an A, B, C, A to a 50% retracement. We're in the process of a B wave and then a C wave, and then this currency pair may continue to the downside. So we'll continue to watch and update and see how the position unfolds, but my view is that we are now in a corrective structure for a second wave that will last potentially a couple more weeks before we start to see the potential acceleration to the downside. But as I mentioned, that's a couple of weeks away, so we'll continue to watch and see how the position unfolds.